So much for the Greek bailout, everybody. The euro is down against the dollar by more than 2.5% just since Friday. And the decline continues this morning, albeit at a slower pace. The fear out there is palpable. But where does it end? On the phone right now is Stephen Englander, head of G10 currency strategy at Citigroup, a man who has seen his share of ups and downs for the euro in more than a decade covering the Forex market. Stephen, let's start with this. What, if anything, is going to stop the euro slide?
I think that the market has enormous doubts that the package is going to work, and not just in the longer term, but even in the shorter term, because what you've seen is that near-term spreads have widened out enormously, both in the immediate aftermath of the package and even today. In our view, I mean, the market's missing the enormous incentives both sides have to make the package work. It's not as if Greece can avoid austerity if they don't go along with this aid package from the EU and the IMF, and the damage done to the other countries in the Eurozone if Greece were to default or to drop out of the Eurozone would be enormous. On the other hand, the Europeans have been unable to convey with any credibility that they're going to stick to this package and make it work, and I think that's why the markets are continuing to sell off, even though on the face of it, this should be a package that allows Greece to go to austerity in a relatively gentle path by the standards that they would otherwise be going.
Stephen, what, if anything, can the EU, the IMF, the ECB do now? Should the ECB be buying European government bonds?
Well, I think that from somewhere there has to be the guarantee that neither Greece nor any of its neighbors are going to restructure or drop out. And at the same time, there has to be the guarantee from Greece and its neighbors that they're going to pursue the path of fiscal consolidation. Right now, we're in the bad equilibrium where nobody believes anything. But if they can make those commitments credible, we could move to the much better equilibrium where interest rate spreads are much lower. They've really been unable to do it so far, but that's the task ahead of them.
Well, Stephen, as you point out, credibility is the key here. That is Stephen Englander from Citigroup.